Good morning, everyone. Welcome to Vickery Holman's property market update. Delighted so many of you have been able to join us here this morning. My name's Mark Pello. I'm Managing Director at Vickery Holman, and we want to say this is, a webinar-based update, whereas we are hoping that by early autumn next year we'll be able to revert to doing a live event as well. But this is really an update on what we did in our presentation in December. So just a brief advert. Vickery Holman, if you'll excuse me for doing this, our Southwest coverage unrivaled in Truro, Plymouth, Exeter and Bristol offices. We have over 80 surveyors spread in 8 counties covering this area. We believe is unrivaled and the largest firm of our type in the region. So what do we do? Well, hopefully you know some of this, but commercial agency of all types, valuation, landlord and tenant, rating, expert representations, property management, building surveying and development advice, all within our remit and the various sectors within it, including such things as development, healthcare, and investment and leisure agency. So I want a little bit about Vickery Holman, a bit of a unique company because we are employee owned, and in our type and sector, we believe that's pretty unique. With every employee has the opportunity of becoming shareholders of the firm. And we believe in being flexible employers, like a lot of you looking at hybrid type working arrangements to make sure it works for us and for the employees. And a heavy investment in well-being, which we believe is vital these days, and has that not been shown in the last 2 years with having to deal with the fallout of COVID. We have 3 APC assessors within our actual team of chartered surveyors who give their time, not only to training people internally, but to other candidates coming through seeking to become chartered surveyors. So as we see it, our vision actually states that high staff retention is a big part of our targets, and that is something we hope we look after. And of course, as a lot of you may know, Southwest is a great place to live and work. So I'm going to hand over really to the people who got the hard work today, the agency team, with the director in charge, Alan Trelaw, is going to chair some questions and answers and hopefully address some of the current issues that have certainly where, if there have been changes since our last full December update. So thank you, Alan. How are you going to hopefully join me now? And I'll leave you in his good hands and the agency team. Thank you.
Hi, Mark. Yeah, I am here. Yeah, sorry about that slight delay on the line. Yeah, thanks for the quick update about Vickery Holman. What a great place. I've been here for 25 years, so it must be all right.
And well done, by the way. He only celebrated his 25 years. He had the envelope yesterday from us. But well done.
Yeah, not the envelope, just yeah.
Thanks so much.
Yeah, thanks, Mark, and good morning, everybody. Yeah, like Mark said, we'd hoped that the presentation along these lines would be in person by now. We have started hosting some smaller local events and plan more of those in the months ahead. But we've taken the decision to keep going with online presentations as they do seem to offer everybody a convenient way for us to keep in touch with people and give you updates like this. Since we last gave an online presentation, we've seen the country and the world learning to live with COVID, which of course has dominated all of the headlines for the past couple of years. We probably thought the virus as the virus has become sort of part of lives, that things might get back to some sort of normal. But of course, we didn't foresee the degree to which the situation between Ukraine and Russia has escalated just when we might have hoped for some sort of normality as we got stuck into 2022. Around the advent of the Russian invasion, we did see what I think was a slight cooling off of new inquiries from people looking for property across our offices, but this didn't really last long. And the general picture over these first few months of the year has been one of strong demand in most sectors and a return of demand in activity in other sectors, such as offices, where the impact of new ways of working is still working its way through. And we'll talk about that a bit later on. We're going to have questions and conversations with my colleagues covering all the main sectors shortly. And I don't want to grab any of their highlights that may come out in the next half an hour or so. But generally, I think it's fair to say that the industrial sector has continued to be the star performer across the region. Retail is doing okay, despite many pressures. And as I just said, the office market is starting to find its feet a little bit, but that's going to take some time. But there are requirements once more in that sector now. From an investor purchaser point of view, investors are hungry to buy property, and as a form of asset, it remains very popular as ever, and maybe even going forward. Bricks and mortar are going to seem just one of those most secure asset classes that everybody wants to get into. Land, whether for commercial or residential development in the southwest, is in short supply, and so demand is generally good in virtually all locations whenever we've got any land that we're dealing with. The leisure sector, from an operational point of view, has been trading at peak levels, and it was strong before the pandemic, but the desire to spend holiday time and money in the southwest has been multiplied since even more visitors have chosen to or had to holiday at home in the UK. From our point of view at Vickery Holman, in our agency department, we've seen progression in all of our key markers over the past few months. The amount of new matters, inquiries, viewings and deals, all showing a year-on-year increase, despite last year having been a very busy year with a lot of catching up following the first year of the pandemic period. There are challenges with us, but the sentiment that I'm hearing, and this may come through from what we're about to discuss, is that most people are now used to there being sort of bumps in the road and have experienced how they've come through those challenges and feel sort of resilient enough to face difficulties from time to time, but with a general sense of overall positivity about where they're going. Anyway, that's enough of my sort of initial introduction, and back to this morning. We've always had good Q&A feedback from previous online presentations that we've given, so we're going to deal with this on a more conversational and Q&A sort of basis for today. We've spoken to some contacts and some other friends of the firm and picked up some questions covering the different sectors to get the ball rolling. But we'll also be taking questions from you direct during this presentation as much as we possibly can and doing our best to answer them. If we don't manage to directly answer your question today, we will review all those questions after the event and answer them as soon as we possibly can afterwards. This might particularly apply if your question is very technical, very specific, or very detailed on a particular location, which might mean we need a little more time to give a proper response. Anyway, so without any further delay, I'd like to bring onto the stage Joe High and Zach Maiden. Joe, who runs our general commercial agency activities across the firm, and Zach, who's our head of agency in our Exeter office. Morning to you both. Hello.
Morning.
Morning, Al.
Hello. I'd like to start with a couple of observations and questions that we've got on the industrial sector. I was saying it's a star performer, and with what I've been asked here is with the demand for industrial stock being so strong, someone's asked if there is, where's the supply coming from of new stock, I suppose, is the question. And it'd be interesting to hear what's going on in your particular locations as to the supply of new stock and where you see more stuff coming from.
Shall I grab that for Plymouth to start with?
Yeah, thanks, Joe.
We haven't got masses of stock. We've had kind of a handful of developments over the last 2-3 years. Most of those have been sold or let off plan before completion. So, the answer is not much. There's a couple of smaller developments more recently that have come on the market, and they've been getting good prices. I'm thinking the Woodpecker units up just off the A38, but there's a handful of them, again 800 square footers. They're achieving sort of £250 a foot, which is record prices for Plymouth. But yeah, haven't got much. We're going to be building some units at Langage Energy Park soon, which is part of the Freeport. Once all of that's sorted, we'll have a big tranche coming. But yeah, there's not much on the horizon.
What about Exeter and surrounds that?
Yeah, it's very similar. I think it's quite well known locally that there's a very short supply of industrial on the market currently. Where's it coming from? Well, there's a couple of sites on the fringe of Exeter and Wellington as well, King's Stainton at the same time. The problem with these sites is that they're being snapped up very, very quickly. And we know that Sky Park being one that we're involved in as well, they're now completely all sold, and we're now achieving record rents for those units. We're about to complete on a deal on Tuesday, actually next week. It's going to be £14 a square foot on market lease terms. Also, we got Mercury Business Park, which they've got it's about 60,000 square foot of land in planning, and so much demand that they've pretty much fully sold as well, although there's a few still remaining. The developer has actually bought the site next door and is going to be developing even more so as well. So we are seeing that on the small scale. Not a huge amount of bigger stuff being built, but there's less spec development or pre-lettings going on, and most of those are probably on the Exeter Logistic Park near Sky Park. So it really is an issue for the region at the moment. I hear from Joe as well. So yeah,
it's the same for Cornwall, really, in the supply of new space, that's for sure. And what I think people have had to get used to in the last couple of years, really, is that whereas historically, certainly down in Cornwall with me, we've never seen so much demand, ahead of things even being built, really, and so occupiers are having to understand that the idea that they're going to have to get their names down, whether it's a pre-let or a pre-sale to get in the door, because a development's going to be sold out, as you say. And well, I think your point about the sort of prices getting achieved there, Joe, probably leads into another question that we've had here, which is somebody commenting that everything sounds rosy in the industrial sector, but what are the challenges ahead, or more challenges now even? Maybe if you can just pick that up, thinking about where prices have reached, which I suppose does help facilitate the building in the first place.
Yeah. So build costs are one of the big things. So we'd always work on, pre-COVID, £80 a foot to build an industrial unit was, about where it generally landed. We're now looking £140 a foot for a, standard shed. So when you think that we were charging more recently £155 to sell those smaller sheds, it's just not viable. There's only £15 a square foot of, profit and all your other costs in there. So, that's why we're edging up on prices. And I'm sure Zach can talk about the prices they've been getting at Mercury and Sky Park as well.
Exactly, Joe. That is a huge issue at the moment, isn't it? It's the build costs, and it surprises us every week pretty much how much these are going up by, through obviously the issues in the world at the moment. What we're seeing in our patch, Exeter region, is we're closing up in on £200 a square foot new build grade A BREEAM excellent industrial units, and that does show the amount of demand, and developers are actually getting it at the moment, which is, I would have said surprising a couple of years ago, but now it's just a safe bet. People are buying into bricks and mortar, and there's just lack of it available.
And I suppose the other challenge, the other side of that is the supply of actually places to build such stuff, isn't it? I suppose such stock, land,
stock of land, yeah.
Which probably there's a little more land the further east we go. Land is in very tight supply down here in Cornwall, that's for sure. And we've seen land prices increase down here as well over this last 2 or 3 years, beginning to catch up with the sort of rates per acre, I guess you might be talking about in Plymouth and Exeter, whereas we've always lagged behind in the past. We've talked about the fact, obviously, these buildings we talk about are obviously new build, and which are going to be as future-proof, I guess, as they could be with regard to energy performance and so on. And we've got an observation from somebody here about EPCs, which we do talk about the energy performance certificates and that sort of thing regularly when we have these sort of updates. But it is a really important factor, isn't it? That and I guess we're beginning to see that with people wanting to invest in new property rather than stick with the old, partly because it portrays something good about their business, but also going forward, I suppose it's a bit like the electrification of cars almost, isn't it? You got to go with the future. Yeah,
and I think now the banks have kind of cottoned on a bit more to those dates coming down the line. So, for a reminder, we're looking at an EPC of a B by 2030. So, that's not, we used to think it's a million miles away. It's not. It's now within the realms of, these 5 or 10 year leases. So yeah, it is a big thing on the horizon. And by April next year, so 2023, all let properties, so that includes your lease renewals, have got to have an EPC. So that means they've got to be an E or above. So it's getting more and more important. And
I've heard you both comment about particular situations where you've had people having to sort of remove or install, or whichever way around it works, or different plant and to do with heating and other air conditioning and that sort of stuff, which is quite a it's something that nobody had to think about a few years ago, put it that way.
Yeah, for sure.
Absolutely, yeah.
The larger end of the industrials, Act touched on it a bit earlier about distribution and so on, but we're not seeing much new build of larger stock unless very specific for occupiers. Have we seen what are we seeing in terms of transactional larger stuff?
In my neck of the woods, it's pre-letting wise on Exeter Logistics Park. There's a few units that are available up there, and obviously they're just waiting for that occupier to come along. It has been a bit slow, I believe, but demand is coming back quite strong for it. So I guess with lack of supply, I should say, not demand, and with the success of other new build sites up at Sky Park and further afield as well, these are going to be the new locations for people to be in. And I can imagine quite soon there's going to be a few lettings done up there on the larger side, but we're not seeing it yet.
Yeah, and in the meantime, Joe, I guess sort of more second-hand sort of space is still changing hands on the larger end of the scale, and people prepared to accept they might have to compromise slightly, but it's the supply that's in town at the time.
Yeah, exactly. Yeah, that is there's a big unit next to our offices in Plymouth actually, which is 60,000 square foot. As Zach said, there's a bit of spec. No one's building it, speculatively. It's all pre-let, so therefore they're taking this stuff because they need it now. They can't wait 12, 18 months, 2 years, so they're paying decent rent, 66,000 square foot for £7.50 a foot. We wouldn't have thought 2-3 years ago that was in the realms of possibility, but they are, because they're having to compromise and they need it now.
Yeah.
I should actually add as well, Al, that we're talking about EPCs and Stovax being one of the big deals up at Exeter Logistics Park. They've actually moved out of Soughton, so there's quite a bit of industrial available now, but obviously very obsolete industrial, which is going to have a massive impact on lettings and take up in the future there. But you can just see that they've had to relocate for obsolescence purposes, and they've realised that by building their own unit out of town in an up and coming location, that is where they see the business for the future.
That's cool. Interesting. I'm conscious of time a little bit, so I think we'll move on to the office sector, which obviously is another sector we deal with a lot. And I think the observation here I have is, which somebody's thrown in, now we are emerging from the pandemic, how are we seeing occupiers using their office space? Are we back to normal? What is normal? Joe, do you want to kick off?
Yeah. Are we back to normal? But I guess we're back in this, this new normal that everyone talks about, which I think for most of us is this hybrid working, in 2 or 3 days a week, at home the rest of the time. But the big corporates, a lot of them haven't even started on that hybrid working journey yet. Most of them are only doing that now. So, probably 18 months ago, where we thought we'd see what was happening in the next 2 to 3 years, we're probably still another 2 to 3 years off from now, really, especially with lease events, because I think most people probably, stayed put and, decided what they were going to do in the last couple of years, have started moving around a bit. Actually, in Plymouth, we've had quite a few expansions rather than contractions, interestingly, but it is all about good quality stuff, and I know Zach's got some up in Exeter, some good quality serviced office space, haven't you, that's going well?
I think the important thing is yes, obviously there has been a fundamental change in the way that people work, but it really is about quality and the flight to quality, and actually really bringing people and attracting people into the office environment. And whether that is, flexible working conditions, flexible space when companies are looking at, I think really it's about repositioning what you've actually got. I mean, places like Exeter, as we all know in this room here, there's just a lack of good quality supply in the city centre. Yes, there's a little bit on the fringe in Winslade Park, but it's a different environment out there. I think personally, if you're going to be in the city, you're going to want to be in amongst a lot of other working businesses. Having people on flexible basis and walking around Southern Hay being a bit quiet, especially on a Friday, I think companies, they're going to be looking at, or they have been looking at, I should say, how we're going to reposition our offices and utilise the actual working space that we've got currently.
Because I think we do want to get people comfortable with being back in and enjoying having a reason for coming back in, don't we?
Yeah.
It's about company culture, and it's about retaining staff and attracting talent.
Yeah.
And that's the most important thing that companies are looking to invest in at the moment.
Yeah, and it is these kind of breakout spaces and stuff like that, isn't it? There's no point everybody coming back into the office and just having your heads down working. We can do that at home, and we've proved we can do that pretty effectively, haven't we? So it's about that collaboration, as you say, is that the culture, and we need space for that, modern.
And interestingly, we haven't seen rents really decrease at all. I guess, it is a bit strange that because we had lack of supply in the first place, but what we're seeing is people just utilizing their working space better. Companies that we're advising at the moment, it's not just about acquisition or acquiring new sites for them. It's actually about advising on their working practices and how they utilize their offices. And that's actually where we can add value is, we're seeing this on a local and in a regional basis. Therefore, you need to speak to us to advise on what you can do with your office accommodation at the moment.
Yeah, as Joe said right at the start, the office sector, we thought 18 months ago we might have seen where it was heading by now, but it's a long way off that. And actually, I think it's more positive than we might have thought 18 months ago as well, isn't it? It is all about quality, getting people back in, sort of embracing the office as still a place to do things, as opposed to walking away from it. It's just going to take longer to sort of work its way through for everybody, isn't it? I think, and where available, I think people are prepared to invest in the office sector as well, aren't they? We've got a question here about other trends in offices, and I think freeholds are still very rarely come up, don't they? And Zach, you've obviously had the experience of selling a freehold recently, office.
Yeah, very interestingly, at the beginning of the pandemic, and I've been on these market reviews where we've been talking about, where the office market is. We saw quite a handful of transactions of people buying their own businesses, and there were some big, high-profile, Broadwalk House being in Exeter for one, Horizon House on Exeter Business Park, and now we're involved in the former Midas premises in Newton Abbot, I should say. But the thing is, we're getting a lot of interest, and the prices on a capital value basis are actually right up there because people are looking at these as, okay, I don't have to deal with a landlord anymore. I'm looking at potential issues in the future with other pandemics or other lockdowns, etc. And actually, by investing my own money into the business, we're protecting the business moving forward. But also, we've noticed a lot of people have got quite a lot of cash reserves in the last couple of years because they haven't been spending it. So I think it was kind of predicted, but it's what we've seen. People are really investing in their businesses, bricks and mortar.
Again, let's move on to another sector, just while I've got you guys on the stage. If we come on to, the third of the core sectors, I suppose, from a general agency point of view for us, retail. And I can recall from previous presentations like this, we've talked at some length about the strength of the coastal and attractive market towns and that sort of thing in terms of retail, which did perform well. But I think a question hanging over almost from that last market review you had was what's happening with retail in the city centres, because we're identifying some different issues with city centre retail property. Perhaps Zach, do you want to kick that off?
Yeah, sure. It's definitely an interesting topic because, yes, we were massively promoting coastal retail because it was performing so well. But what we've noticed since January is actually there's been a massive amount of interest or demand for in-town retail. I'd caveat that by saying that as long as the unit is seen as relatively small and affordable, retailers and leisure occupiers, or probably more so retailers at the moment, are going, this is actually quite an interesting position to get into a good town on an affordable rent and to get our get prominence in that city or town. So we've seen a lot of requirements come round for prime retail, which is kind of interesting for the moment, so long as everything is competitively priced.
Yeah, that's right. That step change in rents that was happening anyway pre-pandemic, wasn't it? When we see it in all of our towns, our major towns and cities across the region. And the other sort of sub point of that, Joe, you can probably come in because I can't remember where we were with the Debenhams in Plymouth at the last market review, but we certainly identified this at some point in the past, identified this issue with the larger sort of box type retail units in the city centres, which obviously you've had some good experience of that. What you have in Plymouth.
So the Debenhams went through in January. Completed in January, and they've already put their pre-app in actually. So some people might have seen that. So they're going to convert all of the uppers to residential, which is a trend that and it's going to be a long burn thing. But retailers don't generally use their upper parts anymore. They are redundant. So for brave investors, there are opportunities out there if they want to be active, get involved, and do something with those uppers, liberate them from tenants, agree new leases on ground floors. there's some good opportunities. And actually in Plymouth, we've had the Debenhams. There's been a big block on Cornwall Street that sold recently, and then another block with the Barclays and the B&M and all of that. That's currently under offer. And I know the guys that are buying that are again, planning to do residential or leisure with the upper parts. So and that will bring people back into our city centres. We've maybe lost some of those office workers that, like Zach said, Friday, Southern Hay, it's pretty quiet. We'll hopefully get those people that are living in the city centre back into to use all the offerings that, we're getting with all these requirements that are coming out.
I think also the interesting thing about affordable retail is, bringing independents and interesting occupiers into our high streets, which, as you just said there, Joe, just backing onto that, is, it's going to promote offices, people wanting to work and live in town. So offices, residential, will be benefited by good quality operators, regional. And landlords also look at that as well, because they just want their unit let for as long as term as possible. They don't want just a generic company going in there who's potentially going to go into a CVA in the future. They actually want to target those independents who the shareholders or the actual original owners are still involved in the businesses.
Yeah, I think that is a bit of a trend, actually. Probably our landlords are a lot more interested in who is going into their property now. They do consider that the use and their their CV, their history, what they've done, because of it's all very well and good having whoever it might be, but it's so easy to go into a CVA now that are they any better nowadays than somebody who's only been trading for a couple of years? Possibly not.
And we've certainly seen a trend of that.
We've had a question pop up. I think Mike's going to pick up on that later on when we talk about the leisure sector in a bit more detail. And I think to almost close on those points about liberating upper parts of the retail, I think it's right. We've known it for a long time and it's happening. And Joe talked about a long burn sort of thing. But we know these retailers are never going to need these upper parts again, are they? So it's got to happen really. But it's just how long it takes to work through in all of our different towns and cities to see these upper parts getting repurposed. Perhaps not exactly a final point on retail, but sort of in a way, we were talking about rents and how rents have become more affordable and better value as occupiers have seen it. But of course, probably you both can think of examples where we've had rateable values. So the business rates are still massively out of kilter with rents and probably you can almost just sort of agree with that point probably.
I mean, we've got one in Cornwall Street in Plymouth actually that we've recently let. Rent is around 25,000, rateable values around 80,000. So we're at 25 because somebody can only pay an aggregate sum for rent and rates. So once we hopefully see those rates coming down, perhaps those rents will go up because they can afford a bit more on that.
Yeah, I think it's the same in all of our towns, isn't it? We've got them here in Truro and just everywhere else where retail rateable values, which date back several, many years now, which I'd like to pick up on in a moment with somebody from our side of things on the rating side. If that's okay with you guys, I would like to move on and say thanks for joining me on the stage now. And I'm going to move over to speak to Jordan Kennedy, who heads up business rates advisory for us across the region, just for a quick update on a sort of a timely update on the business rateable value position, which sort of neatly segues on from for what we were talking about with retail there. So Jordan, thanks for coming onto the stage. I think the first question that many people are asking is when will what's happening with business rates, because it seems to have been something that's been kicked down the road by the government a bit in recent years but is still so far out of kilter with what's happening on the high street. So if you could give us a bit of an update, that'd be great.
Yeah, of course. Thank you so much. I think you're right. It has been out of kilter for quite some time, as you say, but the government do appear to be taking more action towards amending that now, which is really good news for owners and occupiers. So I suppose it'd be best to start just by very briefly explaining how a rateable value is calculated and why they're so out of kilter. So the rateable value of a property, as many may know, is calculated using the open market rental value, which is estimated by the Valuation Office agency on an antecedent valuation date. So current rateable values are actually based on an antecedent valuation date of the 1st of April 2015. But as we are approaching a new rating list now, the valuation date for that list is going to be the 1st of April 2021, with the new list coming into force on the 1st of April 2023.
Okay.
So rateable values in each of the sectors we've been discussing should be more reflective of current market conditions, and certainly will aim to reflect the open market value of, as estimated by the VOA on the 1st of April 2021.
And the first time that occupiers or anybody who's got a business rateable value are going to start to get an idea of what their new rateable value is going to be?
Yes, so the VOA are going to publish a draft rating list on the 31st of December 2022. That's the latest date they can do so, which is 3 months before the start of the new list. And by that time, the transitional relief arrangements and the new rating multipliers should have been confirmed in the autumn budget. So people should be able to get an idea of what their business rates liability is going to be. It was at the beginning of this list, when the draft list was published, there was an opportunity to highlight to the VOA if there were any glaring errors, so factual errors in rateable values. So we would imagine there might be the chance to do that in the 3 months leading up to the start of the list again.
So you're expecting sort of to be busy with starting to speak to people and think about that at the turn of the year then, really?
Yeah, absolutely.
Okay, and do we, I suppose we were talking about retail, but are we expecting any particular winners or losers in the new rating list?
I would say it follows on quite directly from what you've been discussing with the various rents in the various sectors. So retail was certainly previously the biggest contributor to the rateable value pool. We definitely expect that to change, most probably become perhaps the third biggest contributor. Most definitely expect industrial and logistics sector to be the highest contributor, seeing increases in their rateable values, reflecting the increases in rental values that you've seen. And again, I would very much presume office rateable values will probably stay around the same level that we're seeing at the moment.
So the sort of action points for anybody who's interested in business rates then is to keep an eye on the post at the end of the year, is it? Or
yeah, absolutely. And and let us know if there's any questions at the time.
Okay.
Hard to touch on it in too much detail now, but we will be doing a dedicated webinar actually about this later on in the autumn as well.
I'm sure you will be. I'm sure.
Yeah.
Right, well, that's fantastic. Thank you. I think, again, conscious of time, I'd like to say thanks to Jordan, and we'll move on and bring in Claire, our investment specialist, Claire Cochran, if she's around. There is a question in the chat about offices out of centre versus city centre, and perhaps Zach or Joe, you might be able to pick that up online, just tapping out an answer to that while I go ahead with Claire. Oh yeah, Zach's in there already. What a start. Thank you. Hi Claire. Thanks Claire for joining us.
Morning everyone.
So Claire, who looks after investments as a specialism across our region, who's joining us today. Claire, thanks. An obvious question, I suppose, that we get asked, and I've got it here in front of me. What's the strongest sector you're seeing now in the investment market, if there is such a thing?
Yeah, I think from what Joe and Zach and yourself said, it's no surprise that I'm going to say industrial, which definitely remains top of many investors' shopping lists. And last year it was that sector that contributed the overall largest percentage in terms of transactions in the UK. And as you think why, it's the rental increases that they've mentioned, the high occupancy rates. So there's, obviously reversion potential on them as well. And also the fact that it's just performed so well during COVID, which, 2 years ago, did we all sit there and think it would be that much stronger coming out of it? It's pretty spectacular, really.
Yeah, it was a good sector, as you say, already, and then it's just gone into overdrive, hasn't it, in this period, as businesses have perhaps moved even more towards the need for sheds as opposed to more or less anything else, haven't they? Are we seeing a problem with stock then? If obviously, as you're saying, well, whether it's industrial or investment stock or any other stock for that matter, what's the supply of investment stock like at the moment?
Yeah, I mean, across all sectors, it's quite constrained. Industrial particularly, because there's so much demand for it. So when you do get stuff on the market, we are getting multiple bids, often going to best bids for them. And it's the demand's coming from funds, from local property companies, investors, SIP investors. It's just right across the board. Retail, there are a few more opportunities coming on the market now, which is a really interesting sector. particularly for the reasons my colleague had mentioned.
Yeah.
Actually,
yeah, I think there definitely is a reason for the retail's, there's still life in that sector, isn't it? It's just you've got to be prepared to roll the sleeves up a little bit in some cases.
Yeah, absolutely. And I think the fact that we weren't locked down again over Christmas just increased confidence. And then you saw the spate of inquiries come out in January for occupiers. Rents have been rebased, but there was already quite a big fall. So, and how it goes forward will largely depend, I think, on the economy and everything else. But
and again, dealing with the big three sectors, I suppose. Then retail. What about retail?
Yeah, well, it's been through a huge period of change. There is massive variation across yields, even on the same high streets. But I do think the falls have moderated. And I think for somebody that's got a little bit of appetite for risk, there's going to be opportunities, particularly, again, if the rating brings down rents, brings around rentable values. There's obviously some scope there occupationally, cost-wise.
Yeah, that'll be what if rateable values are rebased slightly, that will make it a slightly different complexion, won't it? Actually, because it's always been a bit of an elephant in the room, really. That whatever rents anybody likes to talk about and whatever, and holding costs and anything else. If the rating is looked at in these next few months, that's going to be put a different spin on things. That's been the same for so long, that's for sure. And obviously, you'd echo that point that the rest of the guys were making about the taking the liberation of the uppers, as we sort of seem to call it, or whatever. That there's so much opportunity in some places, isn't there? Provided that's a route you as an investor is prepared to go down.
Yeah.
And the rest of this year, then, what's it looking like? I mean, like you said, there's very little stock around. Are people going to sell anymore? Is there going to be even more money looking to invest in property going forward this year?
I think, I think there will be more money coming in, and I'll come on to that in a little bit. I think in the industrial sector, there will actually be some investors who look for higher returns and have a high appetite for risk that might look to sell some of their assets. They can reposition that into different sectors because the yields are very strong and they've become fairly dry in a lot of places. I think we'll see more money potentially coming into the southwest, which is positive. COVID has changed people's perception of the regions, and also a lack of opportunities elsewhere has focused it down here, which is a plus. I think obviously the economy has got challenges ahead. Inflation's at a 3-decade high, so we are going to see more interest rate rises. How much of an issue that is, I think, depends on how long what's driving inflation carries on. So at the moment, you've also got the conflict in Ukraine, which is driving prices as well. And initially, if that hadn't happened, I think they expected it to bounce back fairly quickly. Now that's less certain. But from what we're seeing right down here at the moment, there's been a lot of appetite down here. It hasn't yet had a knock-on effect.
Was there that's just any other economic factors you're thinking that could influence things? I suppose you've hit them all on the head there, really. I think we've covered most of the points here. I don't have any more questions on the investment sector, but
I think the only thing I was going to also say is that I think investors are also going to look at ESG, environmental, social, and governance, much more in much more depth going forward. It's been on the radar for a while, and it's just even more so important.
Yeah, and that started with funds and so on already, isn't it? Because lots of people want to talk about their green credentials to sell their funds to investors to buy into and so on, don't they? And that's going to trickle down through everywhere, I suppose, isn't it? The environmental side of things.
Absolutely.
Yeah, absolutely. That's a really good point to pick up on, actually. Thanks, Claire. Again, sorry, conscious of time, and we want to get through a couple more people at least before we wind things up. I'd like to say thanks to you, Claire, for now. I'm going to bring in Tim West. We're going to have a slight sort of change of subject. Tim, who specialises as development surveyor working out of our Bristol office, but covering the region on all things development. Hi, Tim.
Hi.
Thanks for joining us this morning. Claire was just talking about how money coming into the southwest and the southwest being ever more popular and that sort of thing, and that's probably something that sort of flows through in your development sector.
Sure.
The first question is a classic question I've come across here, which is the housing market surely peaked now. What are you expecting to see values doing in the short to medium term?
Well, I mean, I suppose it's one of those. It's been an interesting times of value. When the market's going up, it can be as confusing as when the market's going down. And looking at schemes around the southwest and having based my career in the southwest, it's been really positive the way that the market has gone, and it's been a little bit beyond belief sometimes. The prices that we're seeing in quite modest locations traditionally. Everyone, I suppose, thought that the market would stall after the stamp duty holiday end last year. It didn't.
Yeah.
We are seeing huge rises in the prices of living, but I do think that's going to affect the lower end of the market, the more mass delivery end of the market. And I'm still finding, speaking to the agents around the southwest, that we're still getting a lot of interest from outside of the area, from the southeast mainly. Prices are continuing to push. There is still a shortage of supply and a massive surplus of demand. So yeah, I don't think for the short term. I'm going back to quite a few schemes recently, which has been quite interesting. Schemes I valued last year and seeing what they've been achieving recently. And I would say I haven't seen any that have been achieving less than we put on them, and the majority are achieving far in excess of, well, not far in excess, but significantly in excess of what we were able to prove at the time. So the market is continuing to move, and schemes that we were looking at sort of 6 months ago are certainly seeing increases now.
Even now, yeah, right, okay. Wow. Yeah. Okay. Second point somebody's raised here about price inflation affecting the land market and delivery of new schemes.
Yeah, this is a tricky one, especially in my my role in valuation. We are seeing prices, costs, and especially costs for certain elements, groundworks, for example, steel. Timber is a big issue at the moment. So there are certain pressure points within the development cost elements that we are seeing really affecting the financial viability of certain schemes. Now, obviously, we are seeing the continued rise in house prices, which for the most part at this stage has seemed to compensate for the price rises. But with the shortage of labour and the availability, no matter the cost of these materials, we certainly are seeing a squeeze on development projects, and it is looking a little bit tricky at times to try and work out how to accommodate these price rises and still remain viable.
Yeah, I mean, and that's presumably making things just take longer to deliver sometimes.
Yeah, I mean, I think there has been an attitude of let's get this going, because the sooner you can get going with things, the less you're reliant on future inflation. And I think we've seen plenty of long-term 5-year projections which suggest that this is going to be a matter of course for the next few years at least.
Okay.
So yeah.
Yeah, so some of those sort of short-term blips in supply and so on, which we saw last year and the year before, or whatever, different. It's just with us for the foreseeable future now. Really,
but this may be the balancing element that the land market has looked like it's needed for a little bit. We've got hugely high prices, hugely high costs now, and then hugely high land values, and the land market has continued to push values, and especially from my perspective in the southwest, and so the cost element may be the factor which actually ends up causing developers and house builders to go, you know what, I'm not going to overbid. The value of land has hit a peak, and we are going to look to take a more pragmatic view on it. That being said, I'm still seeing land on the market that's achieving in excess of what the traditional view might suggest. So who knows?
There's always somebody for it. Yeah, there's always somebody.
That's it. There's not enough land on the market, so the good schemes are getting really gone after.
Yeah.
And so, it's the traditional problems for the market.
Yeah. Is there anything happening sort of legislation-wise emerging that's going to ease supply, or is things getting more difficult than ever to?
I mean, there's always something on the horizon, ostensibly to make things better and easier in some cases. Now we've got the Part L requirements that are coming through the environment bill, which are coming in June, and there's further requirements on what new developments must provide in terms of stuff like energy efficiency and having electric car points and things like that. So that's going to add a cost onto delivering houses. Biodiversity net gain is something that's been talked about quite a lot in the last 6 months, and how that is going to affect development schemes. Clearly, it's going to reduce the developable area of most schemes. Quite how it affects scheme viability in terms of off-site provision, on-site provision. It's all a bit. We wait for some precedents to come forward on that, and then I suppose this is a little bit further in the distance. But Mr. Gove had a bit of an announcement over the bank holiday weekend about his vision for simplifying the planning process in terms of Section 106 agreements. Levies. I haven't spoken to anyone who thinks that the outline that we were provided, albeit fairly high level at this stage, it doesn't look great. I mean, SIL has been something that's been not universally adopted, and it's not universally been agreed it's a great idea against 106s for those in the market. I think the government are looking to put the onus back on to local authorities to get social housing delivered, and there is an interesting dynamic between when Section 106 was brought in the 90s and the real drop off in our delivery of social housing. So clearly there's a problem, but I don't think the local authorities are going to want to take control of this again. I don't think they've got the resources, and they're not built up at this stage to be able to deliver that sort of stuff.
To tackle that.
And I think they prefer the developers to continue to do it. And I think we do again risk going back to poorly delivered and conceived social housing, which risk ghettoising areas and not really providing a diversity of living. And I know it's not always pepper potting 10 years is a imperfect idea in its idealisms, but it's also something that I think there's a middle ground, and there's a way of delivering schemes where we don't risk ghettoising, as I've said. So.
I mean, talking about the government, there is well, you're touching on that already, but what are the biggest obstacles to achieving sort of housing targets? It's sort of all of the above almost, isn't it, I suppose?
Yeah, and then you bring in an under pressure planning system. I don't know any local authorities haven't lost key people. They've been asked to slim down, spend less, do more. They're hugely under pressure. They're continuing battling viability arguments, which at the moment there's some good reasons to have them, but they continue to battle the pressures that they're being put under, and I do feel for them in a lot of ways. That it's hugely frustrating, don't get me wrong, when we're looking at schemes and you're looking at 6 months to register an application and another 12 months when years ago would have been much more straightforward. But I think I'm loath to really have a go at the planners themselves, because knowing them as I do,
kind of understand what they're up against. You understand the tall order what they've got to deal with. Excuse me. Well, thanks, Tim. You've covered a lot of ground in that. Detail in there, no, not in a bad way. But you covered some really good stuff there.
It's tricky not to go into things in too much detail, and I could go on for a day and a half.
Yeah, and everybody from their own sort of personal point of view is always very interested in what's happening with the housing market, and I think that confidence in the market and almost the sort of the value of your house when you close the door when you go off to work in the morning, sort of stuff. It does influence people's confidence a lot, doesn't it? So what's going to happen to the market over the next few months is going to be very interesting, and as I say, it almost always seems to inevitably affect people's general confidence in everything else they do. So we'll see where we go. Thanks, Tim. Moving on, because we're going to try to get there by the end of at the top of the hour. Tim's dived off the stage. Thanks, Tim, for that. I'm just going to move on to Mike Easton now, who heads up hotels and hospitality for us across the region. And there's Mike. Come on stage. Thanks very much, Mike. Good to see you. Good morning. Mike's got quite a busy day. I think you're where are you? Last thing, your tourism awards. Last thing today, isn't it?
Healy Cider tonight for Cornish Tourism Awards winners party.
Proper job. Excellent. Good. I think Jordan's joining you, isn't she? So that'll be a good one. Mike, moving into a couple of observations that we've had raised to us here. Leisure sector has been busy for operators, but in terms of transactions, there's been a few, but are we going to see more, or what does the rest of the year look like for the leisure market?
I think we're coming off the back of probably quite a strong transactional market for leisure generally. I mean, I say strong, it was quite low stock. So we had high demand, low stock, but it's quite a good time to sell anything really across the board. Holiday parks were particularly strong, and there are a number of off-market deals that were done there. Lots of direct approaches
at very high prices.
Hotels went through
big prices, big things of values are very sought after.
I think if you break it down between say pubs, hotels, and holiday parks, it was holiday parks absolutely got the premiums. Hotels did very well, and pubs actually, there were pubs that had been sort of knocking around for a while that were sold because the demand sort of got to that point really. I think what we're starting to see now, I mean, particularly the first quarter, there's been more of the operators sort of coming forward and sort of talking about their plans for some of them immediately, but some of them towards the back end of this year. I think we'll see a bit more stock.
Right.
Predominantly seeing the longer term business owners that are looking for exit, the sort of 15, 20 year business guys where, they've sort of nothing left to prove ultimately, and in a perverse sort of way, actually saw life outside of their businesses during lockdown one. To sort of give them an idea of what they might do when they exit.
That's good. So but people for them, I mean, most of those, I suppose, as you're kind of thinking, they're going to be head down now, power through this season, and then be taking decisions towards the back end of this season to be selling potentially by the end of, I guess. Yes.
Yeah, I mean, those that will commit now will be looking for an exit at the end of the season
already.
Because invariably the time it takes to sort of market gets things through. There's a few solicitors on here, and of course they'll be getting transactions through as quick as they can, but it still takes time. I think what we'll more likely see though is more stock at the very end of the season for those that sort of want to try and exit before the season next year.
Yes.
That tends to be the life cycle.
That seasonality comes. It does come around, doesn't it? Very much so. And how are the operators sort of faring, on a daily basis, with difficulties with staff and that sort of thing? What are you hearing from the operators this year compared with the last year or two? Just the same, I guess.
Yeah, I mean, there are a couple of things in that really. I mean, operationally, whilst it was a really strong year last year, I suppose if you look at the food and drink market, that was stymied a little bit in December with the Omicron variant coming through, loads of cancellations. That was sort of a bit of a stop for the end of what had been an exceptional year. But again, that's sort of kicked off again more positively this year. Easter's been very strong, but I mean, really over the last week, a couple of the guys that I talked to on the ground, they're saying that they're noticing bookings are down a little bit. This is food and drink, I'll move on to accommodation, but they're just saying, people are obviously noticing that everyone's very well aware that we're in a bit of a crisis of cost of living, and people cut their cloth accordingly.
We've got a question popped up in the chat room on this about specifically about increased energy costs, but I guess that rolls into everybody's cost, doesn't it? Really, increased energy costs expected to reduce leisure spend and consequently depress values. I suppose I can put that over to you, really.
Yeah, it's fine. I mean, what you tended to find, traditionally, it's the bits that people spend money on that they don't necessarily have to, and going out, leisure is obviously a big part of that. I would say though, the last 20 years that let's say work on the millennials sort of routine, people are very used actually to going out, eating out, enjoying leisure time, and there's been a big push in that market. Gyms, all of these sort of experiences, and I think for some it's entrenched. However, for those that aren't in their sort of 20s to 30s, Al, you're only just over that.
Thanks,
that marker,
Michael.
of course. We're going to basically take a bit more time to think about where our money's being spent. So yeah, we're seeing in the food and drink market that it's a little bit slower for bookings at the moment. But when we move across to the hotel and the holiday park market, they're still very strong for bookings, because of course that's far more reaching when people decide they're gonna go away. So you talk about staff though, Al. That is a problem that's going to reoccur this year. There is really a staff shortage in the hospitality sector and in others, and I think there's only so much you can do to sort of redress the balance. We are seeing operators changing conditions for staff. We're obviously talking about wage price increases, but that of course ends up really with what the customer's going to pay at the end of the day. And I'm pretty sure that whilst we'll have a very strong summer again in the southwest for accommodation and the knock on with food and drink, we will see closed venues again because they just don't have enough staff. We'll see, reduced hours, reduced trading periods, reduced menus, because we can't pick up that shortfall. It's going to take time, but it is a chance ultimately for the industry to sort of look at itself and make itself more of a career choice for people, less of a sort of a transient.
And talking of challenges, just like we were about staff-wise there, but the construction part of things as well. There's quite a few leisure-related construction projects going on at different stages across the southwest at the moment. That what somebody has asked to say, lots of price pressures, construction casualties has had an impact on the pipeline of the development of some of these things, but particularly hotels, because there are a number in construction. That's a fact, isn't it? But I guess, well, over to you.
Yeah, I think actually the southwest has been relatively well protected, but that's more because we've only got a couple of cities, 3, if I want to exclude Bristol. Maybe I should include Wales, but I mean ultimately if I sort of pick on Exeter, Plymouth, and I also want to talk about Torbay because that's where the hotel pipeline has been concentrated on. There was the initial stall, but then all of those that were underway have carried on. We've got the Marriott Courtyard at Sandy Park. That's now opening. That's 250 rooms to the city, and they've started on the Indigo on the High Street. That's a great positive sign. So you've got 350 rooms coming to Exeter, brand new rooms, as it happens, and that's quite similar, I suppose, in the number down into Plymouth. We've broken ground on the Marriott again. It's a Moxie at Plymouth Pavilions, and they've sort of re-agreed the deal on the Hove, which is Hilton coming to town for a Garden Inn. But the one to watch, I think, is Torbay, where you've still got Fragrance Group pushing forward with their developments. So we will have 2 openings on Paignton Seafront this year. They've broken ground at Corbin Head, which is between Paignton and Torquay, and the Palace in Torquay. They've started the residential aim, but the residential scheme there, but that'll end with a luxury resort hotel. And you've got another Premier Inn going into Torquay on the car park by the harbour there. So you've actually got somewhere around 800 rooms coming to Torquay, some of which are replacement. There were 3 hotels knocked down for new ones to be built. But you've got a net gain of 500 rooms.
Wow.
Which perhaps is sort of depicts a little bit as to the strength in the southwest, the strength in tourism and resort. Because these centres have been hard places to be the last couple of years, and to see some of those bigger brands sort of putting their name to places like Torbay is actually, I think, probably a positive thing in the longer term.
Yeah, absolutely. Yeah, that is a really positive note to almost wrap up on, probably. Let's just have a look at how the time's going. We've got a quick question just popped in here on the pub side of things. Mike, do you consider the free trade pub market is improving in terms of sales as business levels start showing signs of returning post-COVID? So you can probably see that question.
I think pubs specifically, there hasn't been much stock at all. They've had lots of support during COVID, and when they've been allowed to open, they've actually been very busy. I think freehold, free trade pubs have always been popular. We've seen the sort of the rise and the slight demise of the pub goes. Most people would choose to have autonomy over their sort of where they buy their beer. And maybe the customers like to see a sort of a broader choice as well. I think everyone fell back in love with the pub again, basically, after lockdown. So that was both in terms of visiting and enjoying, but also it was a case that there was lots more new entrants to the market that sat at home during COVID and said, what are we doing with our lives? Let's head west and buy a pub. I haven't seen that since early 2000s.
Thanks, Mike. Yeah, so wrapping up on some pretty positive stuff there. Thanks very much indeed for that. You can probably leave the stage and start your trip down to Perranporth. Thanks very much, Mike, for that. Really good update on the leisure sector. And it's been really good to hear all those different points of view on such a broad range of subjects, really, but all with the Southwest and the Southwest property market at the core of it. That's been really, really good. Thanks, everybody who's contributed. It was intended to be an hour slot, and we're pretty much bang on that. So I don't want to keep anybody much beyond that. I'd just like to say thanks again to everybody who took part today, and you do all know where we are. So if there's any questions you'd like to pose for us, we'd be really grateful to hear from you. We do hope to have this kind of event in person towards the end of the year, if not before. So we do look forward to meeting you properly in the flesh, and I know that's happening much more now anyway in smaller groups. So yeah, we look forward to seeing you out and about. As I say, any questions that want to follow on, do drop them to us and we'll follow them up. And I would just like to wish everybody all the best for a slightly longer weekend this weekend with the bank holiday. And I think it's a goodbye from all of us there. Thanks very much indeed for attending. Thanks very much indeed.